Hello, traders. Cousin Vinny coming to you from theclosingprint.com, Sunday, the 17th of March, 2024. In this edition of your weekend video newsletter, we'll discuss the quarterly options expiration that passed on Friday, leaving the markets a bit vulnerable going into the next few trading days, with S&P 5100 as major support. S&P 500 consolidating above 5100. 5200 is major resistance. RSI is still above 50. Volume was well above average on Friday for the quarterly triple witching. Being mindful that 5100 is major support, so any move below that would be risk off in the short term as we build options support over the next few trading days. In addition, we presently see the S&P 1500 composite, S&P 500 big caps, 400 mid caps, 600 small caps, consolidating, but that line is still green, telling us that the momentum is still very bullish, with the expectation that we'll consolidate recent gains. And should this line turn down and cross over, that would be risk off in addition to support at 5100 on the S&P 500. We presently have a red elder stick right above the 21 period EMA, so we'll watch for that this week to remain as support, along with the ARCA Institutional Index giving us a red elder stick right at the 21 EMA. Momentum has turned slightly lower, so this is neutral to slightly bearish at the moment. For this index that tracks the 75 stocks most commonly held in institutions' core portfolios, an index very important to watch, especially at pivot points and areas of critical support and resistance. The Russell 2000 small caps consolidating last week with 210 resistance and 200 as support, and the 10-year driving expectations with small caps in the short term. If the 10-year yield continues to move higher, look for small caps to pull back, presently giving us a bearish signal for small caps as yields continue to move higher. Momentum is clearly bullish. RSI is rising. Looking for that 4.35% as resistance this week. The New York FANG index of 10 stocks consolidating. We can see that our oscillators are finally resetting and could give us a signal if we remain above 5100 on the S&P. With rotation out of tech into energy, oil and equipment services, industrials, and retail, we anticipate that rotation could continue this week without losing 5100 on the S&P 500. So it's with this in mind and with the indicators mostly bearish or neutral that we'll start the week with a bit more caution, with the expectation that tech will continue to consolidate recent gains from the October reversal. Near the 50-day, RSI drifting below 50, and all of our oscillators looking to reset, with trading on above average volume, noteworthy, yet another reason to stay more cautious to start the week. As previously mentioned, the 10-year is rising, so that should put pressure on small caps. Keep an eye on the momentum here. Whenever RSI breaks above these downtrends, we look for that bullish momentum in the 10-year to continue. We've got all of our oscillators turning up. If this was a stock, would be very bullish. This is putting a headwind on small caps and the market's equities in general over the next few trading days. Coupled with the 10-year yield, we do see junk bonds starting to drift a bit lower. We could stay in this range. Yet another thing to watch this week, with our risk on, risk off indicators drifting lower, IBB, the green line, IWM, the red line, crude oil drifting higher, Bitcoin backing off of recent highs, and the New York Stock Exchange advanced decline pulling back to the 10-period moving average. All indications are that we should be cautious on Monday, Tuesday until options fill in. US dollar is moving a bit lower. On Thursday and Friday, we managed to bounce, but we're below all the major moving averages. RSI staying below 50. So this is something that we'll keep an eye on as well this week. Commodities like crude oil have risen in response to the weak dollar, impacting the consumer's wallet as crude oil and gasoline products move higher, with energy stocks responding in kind. So if you're looking for bullish sectors, look at energy, oil and gas equipment, industrials, and retail this week. With the US dollar lower, silver did move higher in response. Gold took a break, seen to be consolidating the recent gains over the past few weeks, rejected at the 2200 level on Monday. One of the bullish signals from last week was copper, a forward-looking indicator, copper breaking higher on Wednesday, Thursday, and Friday. A retest of the 450 area in the short term, volume was well above average, and momentum is clearly bullish. We triggered a caution signal on the consumer discretionary versus consumer staples ratio. It's always wise to be cautious and wait for the signal to turn back up over the next week or so. Most sectors have pulled back with the exception of energy, oil and equipment services, industrials, and financials. Those are managing to hold on to their 21-period moving average. Tech dropped below the 21-day, and we're looking at retail holding near the 21-day, looking for a bounce. So if you're thinking about sectors to trade this week, keep an eye on energy, oil and equipment services, financials, industrials, and retail. As that rotation sets in and the tech stocks, along with other sectors that have been hot lately, consolidate those gains and pull back to the mean in the short term. With the rotation that we saw over the last few trading days, we're looking for these stocks that are shown below with rising profit estimates with keen interest, as many of them come from the retail like Abercrombie and Fitch, and the financial sector like Allstate Insurance, and the industrials like Caterpillar, with fewer stocks on the IBD 50 set up properly, and those that are from those sectors, industrials, financials, and energy-related names. Caterpillar, for example, remains in a bullish trend above its 921.50 and 200-day moving averages. Volume was well above average on Friday. Oscillators have turned up, RSI's pegged at 70. In addition to bullish activity off of a double or triple bottom on John Deere, volume well above average as institutions come in and buy shares. John Deere is set up a little bit better than Caterpillar only because it's not at recent highs. I like both of them. And my son has a credit spread on Caterpillar to boot, looking for these industrials to continue higher. Additional industrial stocks like 3M, after earnings, continue to move higher. We're right at supply, so I'm looking for a consolidation. Volume was well above average last week. RSI and all of the oscillators have turned up, indicating we could see a little consolidation over the next few trading days, preferably, and a break above 109 as a trigger for a continuation. The financial sector and some of the insurance names also following through, along with the flat 9 and 21-day with the 50-day rising. Volume was above average on Friday, looking for a breakout, RSI rising. Energy names like Permian Resources, very bullish trend, volume well above average. Last week we saw the refiners, Valero, Marathon Petroleum, and Phillips 66 breaking out to new 52-week highs, with Texas-based refiner Delek, DK, showing some interest last week. Institutions picking up shares, above average volume on Friday, looking for this one to continue higher as well. Talked about this last week. As the oil and equipment, refiners, and energy sector all show an increasing bullish follow-through potential. Here's oil and equipment services, volume well above average last week, trending higher, with energy following through on above average volume for the last few weeks. In addition to retail, which is holding on to the 21-day moving average, with RSI remaining above 50, MACD and stochastics are resetting. Stocks like Abercrombie and Fitch pulling back close to the 50-day, bouncing back above the 21-day. Volume was well above average on Friday. Stochastics and MACD turning. This looks like it's going to retest the highs. Retail looking pretty strong last week with Walmart at highs and Costco consolidating after earnings right above the 50-day moving average. Stochastics and MACD resetting. Urban Outfitters back to the 50-day, bouncing, volume picking up, Stochastics and MACD turning. Good setup. Look for a follow-through this week. Retail remaining fairly strong, especially if retail can bounce off of the 21-day and continue higher this week. American Eagle, retail, looking for it to stay above the 21-day, RSI to rise. Volume was above average on Friday. Stochastics and MACD turning. Could be a good setup this week. Grocery, among others, trending at highs. Sprouts Farmers Markets. You can see that institutions have been picking up shares over the last few weeks. Consolidating, looking for a breakout of this flat base and new 52-week highs in the short term. Watch RSI showing muscle as it bases at 52-week highs. AutoZone trending at highs as consumers find it harder and harder to buy brand new cars, repairing and maintaining existing cars and trucks instead, with some ancillary stocks like Waste Connections and Waste Management trending, consumer services, and some of the healthcare stocks like Cigna Health trending at highs, volume above average, Stochastics MACD turning, RSI above 50, RSI above 70 and rising. And finally, watching for Bitcoin to follow through this week. Stocks like Coinbase, which I believe was upgraded by JP Morgan on Friday. Nice above average volume. MACD and Stochastics recycling. RSI just below 70. Price bouncing right above the 21-day. Look for Bitcoin and other stocks in the group to give us some bullish signals this week while we wait for rotation out of tech into those sectors we've covered today. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, March 17th, 2024. I'll send out a watch list later tonight around 12 o'clock midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to check your inbox for that. Otherwise, enjoy the rest of your weekend. Take care, and we'll see you in the morning. Ciao.